Two people buy the exact same washing machine. One pays $600. The other pays $1,400. They bought it from the same store on the same day. So what happened? Most people would blame bad financial decisions. But the truth is far more disturbing. Being broke doesn't just mean having less money. It means paying more for almost everything. And by the end of this video, you'll understand why poverty is one of the most expensive conditions a person can experience. Have you ever noticed something strange? Two people can earn almost the same amount of money, work equally hard, and still end up living completely different financial lives. One slowly builds savings, invests for the future, and seems to move forward every year, while the other is constantly stressed about bills, borrowing money before payday, and wondering why they never seem to get ahead. At first glance, it looks like one person is simply smarter with money. That is what most people believe. But the truth is much more uncomfortable than that. The reality is that being broke does not just mean having less money. It actually makes almost everything more expensive. The less money you have, the more you often end up paying for the exact same things that wealthier people buy for much less. It is a hidden financial trap that most people never notice because it never arrives as one big bill. Instead, it quietly takes away small amounts of money every single day until those small losses become thousands of dollars over time. Imagine two coworkers named Alex and Daniel. They work in the same office, earn almost the same salary, and even sit only a few desks apart. Every morning they grab coffee together, complain about deadlines together, and leave work at almost the same time. From the outside, their lives appear nearly identical. Yet financially, they are living in completely different worlds. One Monday morning, both of them discover that their washing machines have stopped working. Neither of them planned for this expense, and both need a replacement immediately. Alex opens his banking app and finds $600 sitting in his emergency fund. He visits a nearby appliance store, compares a few models, and buys a reliable washing machine for $600. It comes with a 5-year warranty, uses less electricity, and is expected to last at least a decade. Daniel also needs a washing machine, but when he checks his bank account, he has only $43 left, and payday is still 2 weeks away. Waiting is not an option because his family needs clean clothes. Since he cannot afford to pay up front, he walks into a rent-to-own store advertising, "Take it home today with no money down." It feels like the perfect solution. The monthly payment is only $29, which sounds manageable, so he signs the agreement without paying much attention to the total cost. 4 years later, Daniel has paid more than $1,400 for the same washing machine that Alex bought for only $600. They bought the same product, from similar stores, for the same purpose. The only difference was that one had money available when the problem appeared, while the other did not. That difference ended up costing $800. This pattern appears almost everywhere in life. Think about groceries. A large bag of rice is cheaper per pound than a small bag. A family-sized package of paper towels costs much less per roll than buying individual packs every week. Buying meat in bulk and freezing it saves money over time. Warehouse stores are built around this simple idea. But buying in bulk requires having extra cash today. If you have only $20 left until payday, you cannot think about saving money next month. You buy whatever fits inside today's budget, even if it costs more in the long run. People often call this poor financial planning. But it is really the mathematics of poverty. When your budget is constantly under pressure, every decision becomes about surviving the next few days instead of reducing expenses over the next few years. The cheapest option is often the one you simply cannot afford. The same thing happens with transportation. Imagine your car suddenly needs new brakes, and the repair costs $700. Someone with savings pays for the repair immediately, and continues driving safely. Someone without savings delays fixing the problem because there is simply no money available. A few weeks later, the worn-out brakes damage the rotors, turning a $700 repair into a $1,500 repair. Waiting did not save money. It doubled the cost. From the outside, people may ask, why didn't they repair it earlier? The answer is painfully simple. They could not. Financial advice often assumes people have choices that they never actually had. The hidden costs continue inside the banking system itself. Imagine your paycheck arrives one day later than expected, but your rent payment leaves your account today. Your balance drops below zero, and suddenly you are charged a $35 overdraft fee. That single fee makes it harder to pay your phone bill a few days later. Another payment fails, creating another penalty. Before you know it, you have lost over $100 without buying anything at all. Ironically, the people with the least money often pay the highest banking fees, while people with large balances rarely experience these penalties because their savings act like a financial cushion. Money does not only buy products. It buys flexibility. It buys time. Most importantly, it buys options, and having options almost always saves money. This becomes even more obvious during emergencies. For someone with savings, an unexpected medical bill is frustrating but manageable. They pay it and move on. For someone living paycheck to paycheck, that same bill can start a chain reaction that lasts for months or even years. They put the expense on a credit card because they have no other choice. Interest begins accumulating immediately. Next month, they can only afford the minimum payment, so the balance barely decreases. A few months later, they are paying interest on interest, and an emergency that lasted only one afternoon continues costing them money long after the original problem disappeared. Financial stress grows because every setback creates another setback, making recovery slower and more expensive. There is an old saying that poor people spend more on shoes than rich people, and although it sounds strange at first, it perfectly explains how money works. Imagine buying a cheap pair of shoes for $30 because that is all you can afford today. After 6 months, the soles wear out, and you need another pair. This cycle repeats year after year. Over 5 years, you buy 10 pairs and spend $300. Someone else buys one high-quality pair for $150. Those shoes last the entire 5 years with only minor maintenance. In the end, the person with more money actually spends less. The cheaper purchase became the expensive purchase. The person buying cheap shoes was not making a bad financial decision. They were making the only decision they could afford at that moment. That is the hidden cost nobody talks about. Being broke does not simply limit what you can buy. It changes every financial decision you make. It forces you to focus on today's survival instead of tomorrow's savings, and over time those temporary decisions become permanent financial habits. The saddest part is that society often blames people for paying more without realizing that the financial system itself charges a premium for not having money in the first place. When most people hear the phrase, "the rich get richer," they imagine wealthy people earning millions from businesses or the stock market. But one of the biggest reasons the rich get richer is much simpler than that. They pay less for almost everything. They borrow money at lower interest rates, qualify for better insurance prices, receive premium banking services with fewer fees, and often earn rewards just for spending money they already have. Meanwhile, people with little or no savings face higher interest rates, more penalties, and fewer opportunities. The financial system doesn't only reward having money. It quietly punishes not having it. Credit scores are a perfect example. Imagine two people walking into the same bank on the same day to apply for a car loan. They choose the exact same car with the exact same price. Sarah has an excellent credit score because she has always been able to pay her bills on time. Michael has missed a few payments over the past year after losing his job for several months. Both have steady incomes now, but the bank sees them differently. Sarah is offered a low interest rate, while Michael receives a much higher one. By the time both loans are fully paid, Michael ends up spending thousands of dollars more for the exact same car. He isn't paying more because the car is different. He is paying more because financial hardship damaged his credit history, and now that history continues, making life more expensive. The same cycle appears in housing. A family with strong savings can usually afford a security deposit and qualify for a lower monthly mortgage payment. Another family without savings may not have enough money for a down payment, so they continue renting year after year. Their monthly rent may actually be higher than a mortgage payment would have been, yet they never build any ownership. Every payment helps someone else build wealth while they remain exactly where they started. They are not wasting money because they want to. They simply cannot afford the large upfront costs that would allow them to spend less over time. Then there are payday loans, one of the clearest examples of the hidden cost of being broke. Imagine your paycheck is still 5 days away, but your child suddenly needs medicine that costs $100. You have no savings, your credit card is already maxed out, and your family cannot help. A payday lender offers you $100 immediately. It feels like a lifesaver. But the fees are so high that when payday arrives, paying back the loan leaves you short on rent. Now you need another payday loan just to cover the next expense. Before long, a $100 emergency has turned into hundreds of dollars in fees. The loan solved today's problem, but it quietly created tomorrow's crisis. Opportunity cost makes this situation even worse, although most people never notice it. Imagine two friends each receive a $1,000 tax refund. Emma already has an emergency fund, so she invests the money in a simple index fund that earns an average return over many years. Jake uses his refund to pay off overdue bills because he has no other choice. Jake made the responsible decision, but years later Emma's investment has grown significantly while Jake has nothing left to show for his refund. The difference wasn't intelligence or discipline. It was financial breathing room. One person had the freedom to invest, while the other was forced to survive. Stress also carries a financial cost that rarely appears on a bank statement. People living paycheck to paycheck spend an enormous amount of mental energy worrying about money. They lose sleep thinking about bills, avoid opening bank apps because they fear what they will see, and constantly calculate whether they can afford groceries, gas, or medicine. This stress affects concentration at work, relationships at home, and even physical health. Studies have repeatedly shown that chronic financial stress can reduce decision-making ability because the brain becomes focused on immediate survival rather than long-term planning. It is difficult to make excellent financial decisions when your mind is busy wondering how to make it through the week. None of this means people are powerless. The hidden cost of being broke is real, but understanding it is the first step toward escaping it. The goal is not to become wealthy overnight. The goal is to slowly create financial breathing room. Even a small emergency fund can prevent a minor problem from becoming a financial disaster. Saving just a little every payday may not feel exciting, but over time it creates options, and options are incredibly valuable. They allow you to buy quality instead of convenience, repair problems before they become expensive, avoid unnecessary interest, and say no to predatory loans. Perhaps the most important lesson is this: stop judging people based only on their financial results. Two people can make very different choices because they are living under very different circumstances. Someone buying the cheaper product is not always saving money. Someone taking a high-interest loan is not always irresponsible. Sometimes people are simply choosing the only option available to them. Understanding that difference changes the way we think about money, success, and poverty. The next time you hear someone say, "Poor people should just make better financial decisions," remember Alex and Daniel. Remember the washing machine that ended up costing more than twice its original price. Remember the shoes that looked cheap but became expensive. Remember the overdraft fees, the payday loans, the delayed repairs, and the opportunities that disappeared simply because there wasn't enough money at the right moment. Being broke is expensive not because poor people spend recklessly, but because the financial system often charges the highest prices to those who can least afford them. And once you understand that hidden truth, you stop seeing poverty as a simple lack of money. You begin to see it as a cycle where every expensive decision creates another expensive decision. The good news is that cycles can be broken. They are not broken with luck or overnight success, but with knowledge, patience, consistent habits, and the determination to create just enough financial space that one emergency no longer controls the rest of your life. Imagine two children growing up on the same street. One watches their parents solve unexpected problems with savings. The other watches their parents solve those same problems with debt. Neither child chooses the family they're born into, yet both inherit something far more powerful than money. They inherit financial habits, opportunities, and limitations. That's why poverty isn't just the absence of wealth. It's a system where having less money often means paying more for the exact same life. The cruel irony is that those who can least afford higher costs are usually the ones forced to pay them. But here's the good news. Every financial journey begins with awareness. The moment you understand this hidden cost, you stop blaming yourself for every setback and start making decisions that slowly break the cycle. You don't need to become a millionaire overnight. You simply need enough financial breathing room that one unexpected expense no longer becomes a financial disaster. Wealth doesn't begin with millions of dollars. It begins with your first emergency fund, your first debt-free month, your first investment, and your first financial choice. Because in the end, the greatest luxury isn't owning expensive things. It's having the freedom to choose.